Welcome, eager moneymakers. Welcome to the Jetset Wealthstyle channel. Please like, subscribe, and hit the notification bell, and we'll continue to bring you more videos that will motivate you to press on in whatever venture you are pursuing. Okay, let us begin. Is cryptocurrency the golden ticket to financial freedom or a volatile gamble? As we step into the final stretch of 2023, cryptocurrency continues to be a buzzword, stirring up a whirlwind of chatter, speculation, and intrigue. It's been a journey, from the inception of Bitcoin in the late 2000s to the rise of Ethereum, and now a plethora of digital currencies that have cropped up, each promising to be the next big thing. In many ways, the current state of cryptocurrency is akin to the Wild West, a new frontier brimming with opportunities but also fraught with danger. It's the allure of striking gold that has drawn many to this digital frontier, and indeed tales of crypto millionaires who have struck it rich overnight are not uncommon. Cryptocurrency, in its essence, offers a decentralized and digital alternative to traditional money. It's a brave new world where you can buy, sell, or trade value without the need for an intermediary like a bank. It's a world where blockchain technology has the potential to revolutionize industries, making transactions faster, cheaper, and more transparent. But as with any investment, the potential for high returns comes with high risk. Cryptocurrency markets are notorious for their volatility. Prices can skyrocket one moment, only to plummet the next. For every tale of a crypto millionaire, there's a cautionary tale of someone who lost it all in a sudden market crash or due to a scam. Moreover, the lack of regulation and the anonymity that cryptocurrencies offer have made them a popular tool for illicit activities, further muddying the waters. And let's not forget the environmental concerns associated with mining cryptocurrencies, which require vast amounts of energy and contribute to global warming. So the question remains, is investing in cryptocurrency a prudent move towards financial freedom, or is it a precarious gamble on a volatile and unregulated market? The answer, as with many things in life, is not black and white. To understand the potential of cryptocurrency, one must first understand what it is. So, what is cryptocurrency? In the simplest terms, it's digital or virtual money, but it's not like the digital representation of a dollar or a pound on your bank account. No, it's much more than that. It's a new form of currency built on a technology called blockchain. Now, what's a blockchain? Picture a ledger, a book of records, but instead of being kept in one place, it's distributed across a network of computers around the world. Each transaction made with a cryptocurrency is recorded on this ledger, creating a chain of blocks, hence the name blockchain. This technology ensures transparency and security, making it nearly impossible to counterfeit or double spend. It's decentralized, meaning no single entity, like a government or a bank, has control over it. This decentralization is one of the key aspects that makes cryptocurrencies like Bitcoin and Ethereum stand out. Bitcoin, the first cryptocurrency, was invented back in 2009 by an anonymous person or group of people using the pseudonym Satoshi Nakamoto. Bitcoin introduced the concept of a decentralized digital currency to the world. Then we have Ethereum. Launched in 2015, Ethereum not only serves as a digital currency, but also as a platform that enables smart contracts and distributed applications to be built and run without any downtime, fraud, control, or interference from a third party. This has opened up a whole new world of possibilities in the field of decentralized finance, or DeFi for short. Now, before we get ahead of ourselves, remember that with all new technologies, there are risks. The value of cryptocurrencies can be volatile, and while some see this as an opportunity for high returns, others see it as a potential for significant losses. Cryptocurrency is a complex yet fascinating new form of currency that is changing the financial landscape. It's an area that's still evolving, still maturing, and it's no wonder that it has captured the attention of investors around the globe. Investing in cryptocurrency offers a unique set of advantages and disadvantages. Let's start with the upside, shall we? One of the most enticing aspects of investing in cryptocurrency is the potential for high returns. Traditional investments such as stocks or real estate can generate substantial returns over a long period, but cryptocurrencies can skyrocket in value within a very short span of time. Some early investors have seen their modest stakes grow into fortunes. Secondly, the accessibility of cryptocurrency markets is unparalleled. You don't need a stockbroker or a real estate agent to get started. All you need is an internet connection and a digital wallet, and you can invest from anywhere in the world at any time of day or night. This opens up the world of investment to a whole new demographic. Lastly, there's the future potential of the technology. Cryptocurrency is more than just a digital asset. It's the backbone of blockchain technology, which has the potential to revolutionize industries from finance to supply chains and beyond. Investing in cryptocurrency is, in a way, investing in this future potential. However, every coin has two sides, and the world of cryptocurrency is no exception. Its volatility is infamous. Cryptocurrencies can see their value skyrocket, but they can also plummet just as quickly, often without warning. This can lead to significant losses if you're not careful. The lack of regulation is another concern. While the decentralized nature of cryptocurrency is part of its appeal, it also means there's no safety net. If your digital wallet gets hacked or the exchange you're using goes bankrupt, there's often little to no recourse. Lastly, the potential for loss is significant. Unlike a stock or a piece of real estate, a cryptocurrency doesn't represent a stake in a company or a tangible asset. If a cryptocurrency's value drops to zero, there's nothing left to salvage, and your investment is gone. Cryptocurrency investments come with their own unique set of risks and rewards. It's crucial to do your research, understand what you're investing in, and never invest more than you can afford to lose. Can investing in cryptocurrency truly lead to financial freedom? This question lingers on the minds of many, especially in this digital age, where cryptocurrency is making waves in the financial market. Financial freedom is an appealing concept. It's the idea of having enough income to pay for living expenses for the rest of one's life without having to be employed or dependent on others. It's about breaking free from the traditional 9-to-5 grind, living life on your own terms, and having the financial cushion to do so. Cryptocurrency, with its potential for high returns, has emerged as a possible vehicle towards this financial nirvana. There are stories that dazzle us, of early adopters who've made fortunes. Take the Winklevoss twins, for instance, who reportedly became billionaires through their early investments in Bitcoin. Or Eric Finman, who invested in Bitcoin at the age of 12 and became a millionaire by 18. But it's important to remember that for every success story, there are countless others who have not been as fortunate. Cryptocurrency is notorious for its volatility. The same unpredictability that can lead to astronomical gains can also result in devastating losses. Moreover, the world of cryptocurrency is still in its relative infancy. It's a new financial frontier, and with that comes uncertainty. Regulatory issues, technological changes, and market adoption are all factors that could significantly impact the value of cryptocurrency. Furthermore, investing in cryptocurrency requires a level of financial literacy and understanding that not everyone possesses. It's not as simple as buying low and selling high. Understanding blockchain technology, deciphering market trends, and navigating the complex landscape of digital wallets and private keys are all part of the equation. So, can cryptocurrency lead to financial freedom? Potentially, yes. But it's not a guaranteed ticket. It's a high-risk, high-reward venture that should be approached with caution, knowledge, and a clear understanding of the risks involved. It's a journey that requires patience, resilience, and a willingness to learn. While cryptocurrency has the potential to contribute to financial freedom, it's not a guaranteed path. Investing in cryptocurrency requires careful consideration and smart decision-making. The first step to making a smart crypto decision is to arm yourself with knowledge. Understand what cryptocurrencies are, how they work, and the technology behind them. Take a deep dive into the world of blockchain, learn about decentralization, and get to grips with terms like mining and hashing. Remember, knowledge is power in this sophisticated and ever-evolving world of digital currency. Next, you must understand the market. Cryptocurrency markets are highly volatile. Prices can skyrocket or plummet within hours. It's crucial to stay updated with market trends and news. Be aware of the factors that cause these price fluctuations, such as regulatory news, technological advancements, and market sentiment. One smart strategy to consider is diversification. Just as you wouldn't put all your eggs in one basket, you shouldn't invest all your money in one cryptocurrency. Diversifying your investments across different cryptocurrencies can help mitigate risk and potentially yield better returns. It's also important to remember that investing in cryptocurrency isn't a get-rich-quick scheme, it's a long-term commitment. You need to be patient, stay focused on your investment goals, and be prepared for the market's ups and downs. Moreover, security should be a top priority when investing in cryptocurrencies. Ensure you're using secure and reputable platforms to buy, sell, and store your digital assets. Understand the risks associated with hacking and fraud, and take the necessary steps to protect your investments. Lastly, don't go it alone. Seek professional advice before making significant investments. Financial advisors, tax consultants, and legal experts can provide valuable insights and guidance, ensuring you make informed and strategic decisions. And remember, every investment comes with a degree of risk, and cryptocurrencies are no exception. It's crucial to only invest what you can afford to lose. Cryptocurrency holds potential, but like any investment, it requires careful consideration and smart decision-making. For more videos about ways to moving forward to financial freedom and the motivation to achieve money goals, please like and subscribe to the Jetset Wealthstyle channel.